Welcome to Stat Plus, where we enable smarter conversations wherever you go. In today's video, we look at how rising inflation in the US could actually work in India's favor during trade talks. The latest US economic data reveals a complex inflationary landscape that significantly strengthens India's negotiating position in ongoing trade discussions. June 2025, CPI figures show inflation accelerating to 2.7% year over year, up from 2.4% in May, while the producer price index for processed goods, covering most imported goods used by businesses, surged to 1.9%, climbing from 1.7% in May. This upward trajectory in import prices signals underlying cost pressures within the US supply chain that haven't fully surfaced in top line inflation metrics yet. Despite the Trump administration's assertions that the overall PPI decline from 2.7% in May to 2.3% in June demonstrates no tariff related impact, this interpretation overlooks critical underlying dynamics. The headline PPI improvement is primarily driven by services deflation, a development that actually undermines US economic strength rather than supporting it. These evolving conditions make it increasingly likely that further modifications to the proposed tariff structures, scheduled for August 1st implementation across multiple countries, can be expected in the coming days. This economic volatility creates a favorable environment for India to negotiate a mutually beneficial interim trade agreement with enhanced terms. The June services PPI decline, paradoxically, represents troubling news for the US administration. Two fundamental factors drive this phenomenon. First, discretionary services demand has contracted sharply, triggering severe deflation in sectors such as traveler accommodation and airline services. This demand contraction in the US economy has persisted since early 2025, evidenced by the negative GDP growth of negative 0.5% recorded in the January to March quarter. The upcoming Q2 GDP release will provide crucial insights into whether this economic weakness has deepened. Second, year over year energy cost reductions, including approximately 8% decline in gasoline prices, have enabled energy intensive services companies, particularly in travel and hospitality sectors, to reduce business customer pricing. This dynamic has compressed PPI interim services inflation to just 1.4% in June, representing less than half of 2024 levels. Critically, these deflationary trends in services prices haven't benefited US consumers yet. Transportation services CPI, notably, remains elevated at 3.4%, highlighting the ongoing strain on consumer budgets and indicating limited prospects for any near term demand recovery. These dynamics suggest that substantial inflationary pressures could escalate further in subsequent quarters. For India, these conditions present an extraordinary strategic opportunity. The US administration's mounting economic challenges create leverage for securing more advantageous trade terms. As global economic dynamics shift, India's position as a stable growing economy becomes increasingly valuable to US policymakers seeking mutually beneficial partnerships. Now, let's hear from you. What kind of trade agreement do you think would benefit India the most right now? Let us know your thoughts in the comments below. Thanks for watching. If you found this analysis insightful, please like, share, and subscribe to Stat Plus for more updates. Whether you're at work, school, the gym, or catching up with friends over coffee, our content empowers you to contribute meaningfully to conversations on a wide range of topics. Have better conversations wherever you go.